Hello everyone, in a new lesson with the course presented by Prop W. In the previous lesson, we finished learning about Japanese candlesticks and their famous patterns. Now we will see what these patterns will look like when combined on the chart. Every chart tells a story, but most traders never learn how to read it. In this video, we'll break down price action, the purest form of market analysis, and explore the three main trends that shape every market move. Let's start now by defining price action. Price action is simply the study of a market's movement through its price chart, without relying heavily on lagging indicators. It's about reading the story told by candlesticks, highs, lows, and patterns to understand who's in control, buyers or sellers. Think of it as learning the market's body language. Every candle is a word. Every pattern is a sentence. And the overall trend is the chapter you're in. Well, what will knowing price action do for my trading? The biggest advantage of price action is clarity. It responds to the market instantly, unlike many indicators which often tell you what happened after the fact. It also exposes market psychology in real time. Sharp drops reveal fear, aggressive rallies show greed, and choppy sideways moves often point to hesitation. Once you recognize these patterns, you'll be able to act with more confidence and avoid chasing false signals. Let's now move on to learn about the three basic types of trends. Before you enter any trade, you must identify the market's direction. There are only three possibilities. Uptrend, a market moving higher over time. Downtrend, a market moving lower over time. Sideways trend, a market stuck within a range, with no strong bias either way. Each of these trends demands its own approach and strategy. Okay, let's dig deeper into the explanation. An uptrend is marked by a series of higher highs and higher lows. It's the buyers who are in control, pushing price steadily upward. The smart play here? Wait for temporary pullbacks, those moments when price dips toward a support level, and look for buying opportunities in the direction of the main trend. Remember, in an uptrend, buying the dips is usually safer than chasing price after a big move. Then we have the downtrend. A downtrend is the exact opposite: lower highs and lower lows. Sellers dominate, steadily driving prices lower. In this environment, rallies toward resistance often present opportunities to sell into the downtrend. Golden rule: don't buy against a strong downtrend unless you have a clear, high-probability reversal signal. Finally, we have the sideways trend. In a sideways or ranging market, price bounces between horizontal support and resistance. Neither buyers nor sellers have the upper hand. Here, range trading strategies shine: buying near support, selling near resistance. But always be prepared for a breakout, which could signal the start of a new trend. Now, we will start the practical application on our platform, Prop W. We start first by visiting the Prop W website. Then we choose the appropriate pair to trade, like BTC in our example. Now, we will choose the analysis using the Trading View mode from within the Prop W website. We can choose the time frame by clicking on the word More. We will first choose the weekly frame to be able to determine the general trend of the currency, whether it is an uptrend, a downtrend, or a sideways trend. Then, we will return to the daily frame to complete the application. Through the previous information that we studied together, we see many subtrends which we will now identify. We start by pressing the small button on the left edge, then we will choose the first option and scroll down a little and click on the Parallel Channel option. We now begin drawing the trend by identifying the first point and connecting it with the last point. Then we pull the field down. The current trend is a clear downtrend, and we will color it red to distinguish it from other trends that we will identify later. Once again, we choose the Parallel Channel option to draw the second trend. We also determine the first point and the last point, connect them together, and drag the field down. Since this is an uptrend, we will color it green. If there is any inclination in the trend, the points can be adjusted freely. And one last time, we will choose a parallel channel to draw our last trend, which is the sideways trend. In the same way, we reach the first and last point and pull the field down. We will choose the white color for the sideways trend. Of course, the colors are not specified, and you can choose the colors that suit you. Thanks for watching. If you found this helpful, please hit the like button and subscribe for more clear and practical trading guides. Drop your questions in the comments below. I'll be happy to answer. Until next time, happy trading!